With the Hollywood strike now in the rearview mirror, companies are looking ahead to 2024 to catch up on content. But with Apple and Paramount reportedly eyeing a bundle in Disney's proxy battle, what will 2024 bring for the streaming giants? Mark DeBevoise, who is the Brightcove CEO, joins us now. Mark, great to have you here in studio with us. What does this set up now that you've got some of the labor negotiations and collective bargaining in the rearview mirror for content production going forward?
Yeah, thanks, Brad. Great to be here. Look, I think with the strike ending, you're going to see a ramp up in production, but I think that ramp is going to be slightly slower than we've seen before, right? There's been effectively an overinvestment in content to build up these streaming powerhouses, right? They've built up huge subscriber bases, meaningful growth over the last few years. So many of them continue to grow at double digits, but the amount of content they put into those services have created a deep, set of losses at many of those companies that they need to trim. So I think you're going to see, a ramp up post-strike, but I think you're going to see that be a slower ramp up, right? With that billions and billions, hundreds of billions spent in content coming down a little bit year over year over time.
And Mark, when it comes to the fact that so many of these companies overspent, to put it in your words, when it comes to content, we've seen those losses really be a theme here over the last several quarters. We also started to see more bundling, and we're seeing more and more companies, it seems, by the month that are trying everything they can to lower those churn rates. Do you think that's going to work? And I guess, what does that signal just in terms of, is this the first step to broader consolidation?
Yeah, so look, I think they are certainly looking at bundling as a way to reduce churn or a way to impact, how they can retain those customers longer term. But at the end of the day, you're going to see those ARPUs come down as you do those bundles, right? That ARPU being average revenue per user. So I think at the end of the day, they're going to give consumers a lot of different choices over the next few years. You're seeing Max and Netflix come together on Verizon's Plus Play. You see the rumor about my old shop Paramount Plus and Apple coming together. I think ultimately the long term, those channel storefronts that you see on Amazon and Apple and others, and I think many other technology platforms will start to bring together a lot of consumer option, right? You'll have multiple choices of where to go. And you'll have multiple choices of what bundle to create on your own. And I think that's going to be a really great opportunity for consumers. Hopefully it reduces that churn, but at the end of the day, these services are going to need to find a way to be more efficient with the spend that they're doing.
Yeah, Mark, how much pricing power do you think a lot of these streamers still have? The fact that they need to rely maybe a little bit more heavily on some of these bundles, trying to lower the costs. Are we almost near that maxing out point when it comes to pricing, at least for now?
I think it's going to depend on the content and what you put in each service, right? You've seen Netflix have meaningful power to go to almost $20 on an average, subscriber, and you're seeing others go the other way with lower priced ad-supported services. So I think you're going to see a spectrum. It's not a one size fits all. Ultimately, though, the idea that they all do need to save money on creating these services, and that's both in content and in technology. And I took the job as the CEO of Brightcove 18 months ago with the idea that we could help these companies save some money on their infrastructure. They didn't all need to create the service bespoke on their own platforms. And it's not just the big six. There are hundreds of these companies around the world in each territory and in each area.
It's also been the year of the advertising tier too over these past 12 months too. Is it clear whether there's a clear winner in this early onset that's being able to woo marketers and advertisers and get some of those dollars to kind of offset where some of the users perhaps are saying, we don't even want to see the ad, so we'll either pay up or we'll pay into that advertising tier and pay less.
Look, I love that that's happened. I think the FAST revolution, the free ad-supported streaming television revolution with Roku Channel and the likes of Samsung TV Plus and others has really ramped up the opportunity for advertising on these services. So you'll see each subscription service also have an ad-supported with lower price tier over time. I think each one will do it. I think the idea there is, by the way, the winner is streaming overall, right? You see it ticking up in terms of market share overall, in terms of consumption. And I think we almost incorrectly look at it as like, well, broadcast is, flat and cable's down and streaming's up. It's just, this is the new form of distribution and what is going to be the future globally. And so you're going to see every type of business model laid into that distribution format. And so having a strong ad-supported service and a capability to be able to deliver that to users is going to be key. And you're seeing it in the ad dollar shift, right? You're seeing ad dollars shift to that CTV platform now in a meaningful way over the past few years.
Mark, how is the industry thinking about or assessing maybe the risk associated with AI preparing themselves and their platforms for that risk? I would assume, obviously, and you can just see what's played out even within the strike negotiations, certainly a massive story and one that could have a huge impact here on the industry.
Yeah, I think first of all, in the strike, you got some protections in the settlement, right? So they're not going to be creating actors out of zero cloth.
Thank goodness.
And making them go that way. Yes, you guys are real. I'm real. We're really here in the studio.
For now.
But for now, so I think that part, I don't want to say the genie's back in the bottle, but at least there's some protections for those folks that are the core to working content. But I do believe AI is going to have a huge impact on how these services operate inside, right? So you think about how they are optimizing which content to show and how to show. I mean, we have an analytics package at our company that both optimizes where you put your ads and how many ads you put in the stream. It optimizes how your content is performing versus the rest of your content and other folks' content in our portfolio. But I think the big concern I have and we have as a company is the security of that and the amount of copyrighted material that's being used to educate these models, right? And so we take a very specific approach to making sure that the way we implement AI is secure for our customers, right? That their content and their IP is not being shared in a model that they are not aware of or not clear that that's what's driving the answer. And I think that's going to be paramount to the future of how this is implemented on these services.
The actors and the writers were able to get protections on generative AI, but does that mean for advertisers that they are not going to be leveraging that technology in order to leverage the data sets that they already have access into and the hyper-targeting ability within many of these platforms to then say, okay, we've got a generative AI advertisement that we can serve up a different experience to anybody who's
watching. And I think that starts with knowing where, when, and how long to put advertising into a piece of content. Where you have to optimize that for effectively the strongest RPM, right? The revenue per user per 1,000 views. And the way you're going to do that is by checking how that performance is. Sometimes, you put too many ads in there, you're scaring those users away. You put too few ads, you could have maximized revenue in a different way. So it starts with knowing how much, when, where to put that ad. Then you say, who am I targeting? Do I have that data? Do I legally have that data? Because obviously the privacy rules have changed meaningfully over the past few years, especially in Europe and internationally, but even so here in the US. So with this cookieless future that we're all dealing with, that first party data is going to be key. You own that data in your service. So that's why I think these services are going to remain hybrid, right? The subscriber portion of it will give you that data in order to enable a better advertising service. And we're not there yet. I mean, we all see repeated ads. We all see the wrong things coming out of many of these services. I think that will improve over time as we get better with the data and with what it can tell us.
Mark DeBevoise, great to have you here in studio. Thanks so much for taking the time to join us, CEO of Brightcove.
Thanks for having me.